Hey everybody, we're going to talk about divergences, price divergences across correlated pairs. So this is a very, very strong signal that can help you to predict reversals before you get the break of structure, right? If you've noticed a common theme here, we're looking to get involved before or as moves happen rather than after the move has happened. Our whole trading system is designed to get us in trades pretty early on and getting as many. We're trying to get involved as often as possible with a high win rate as well. So one of the tools that we can use, and one of the tools that I just used recently here, and we can see on ES and YM, so all of the futures pairs are correlated. We can see that here on ES, we have made a higher high. Here on YM, we have made a lower low. Okay. So this is signaling a break in correlation and switch in strength. Okay. So this would mean that these pairs are becoming stronger because we have a bullish divergence. Okay. In contrast, up here, we have a lower high to the right and a higher high to the left. Here we have a higher high. So ES on the left made a lower high and YM made a higher high. This is also a divergence. This would be a bearish divergence, right? It's happening above, it's bearish. If it's happening below, it's bullish. So what does this actually represent? If we look here on ES, price has failed to push higher and then continue to push down. Here on YM, price pushed higher and then began to push down. So what this is showing is that this is in fact not a break of structure, but is a technique to collect liquidity to drive the market further down. And you can see that even though that this hasn't pushed up, the liquidity has in fact been collected on the correlated pairs. Why is this important? Well, because these are USD pairings, right? These are both USD pairings. They're the same market. They're both USD pairings. They're correlated like this, right? Here on the sell side, we've seen a higher high on ES and a lower low on the Dow Jones. So if I extend that low, the first low out in time, you can see that it never reaches into that liquidity. So many people would be looking at this to take shorts into this liquidity, relative equals, thinking this area is weak, not understanding that the liquidity has been gathered, it's been collected on the correlated pair, right? We've swept below that low, rated stops, and now have reversed. So we can see this as strength on this pair without the need to look for that drive lower because it's happened in a correlated asset. Okay. This alone, of course, is not enough to take a trade, but what we would do then is we would start to expect and we would start to look, this is called bias building, right? We would start to look on a lower time frame to start to confirm that bias or that intuition that is telling us, based on the technicals, that price may want to reverse. So what we could look for is in intraday price action, if that is in fact happening. And of course, we've seen that did happen, and I took a trade on NQ in here, and this was one of the reasons why, one of the technicals that was backing my bullish bias. Let's take this a step further, and I'm going to pull up the forbidden indicators. We're going to pull up an RSI, okay? We don't obviously use RSI. I don't use RSI. But what we can see here as well, RSI is basically just highlighting this same phenomenon, okay? So here we've made a higher high, and here we've made a higher high, so it's in correlation. Here on YM, we've made a lower high, but we've made a higher high on the RSI. So instead of us relying on indicators to tell us this information, we're relying on price charts. We're relying on correlated pairs. We're waiting for a break in correlation because that can signal a changing market condition, which is just what happened here. And it is just what happened here. So I'm going to turn off the the recording now, and I'm going to pull us into an intraday chart and see another example, because this isn't only applicable on a 4-hour chart, it's applicable on any chart, right? Intraday, daily, even weekly, right? All right, so here's another example of how we can use this in our trading. On the left, on ES, on the 1-hour chart, price has made a lower low. It has dug into a liquid region below this old low at 2 a.m. Here on NQ, we see that price has not dug into that low, showing a break in correlation, showing us that this is in fact a sweep and not a break of structure to push down. Price rallies away from this region, and we can begin to look at liquidity above. So we have clearly structural liquidity in here and structural liquidity in here. As price displaced away from the sweep, you can see it's made a higher high here on NQ as well. We can look to trade in this type 1 region, which we've refined here to the breaker. We have an FEG stack inside. You have one here as well. Price decided to tap into the first one, came, take out liquidity, pushed back down, took out internal range liquidity before blasting off to take external range liquidity. But the reason that I've picked this one is because in the event of taking a trade here, targeting this high, we wouldn't have been profitable. We wouldn't have been able to hit or take profit. But what we can see when we're looking at multiple pairs is this high here is the same as this high here. And what we could do is we can close our trade when a correlated pair hits the pool of liquidity, which if I stretch this high across, you can see we've tapped into the liquidity. If I stretch this high across, you can see we have not come close to the liquidity. So not only is it good for entries, but it's also a good indication of when we can exit the market, because liquidity is more than just a single pair thing. It is used and manipulated on multiple correlated pairs. Okay, so again, in this case, we have a divergence that gives us a sign that we're going to continue higher. And we have a divergence from here to here, from this high to this high. It made a higher high on NQ, but on ES, it's made a lower low. So we understand that liquidity has been reached, even if it's not clearly visible on this market. It is visible on the correlated market, because markets are more than just one pair. They are several linked pairs. Okay. As you can see, this price has liquidated the external range liquidity. We would expect that it would come and liquidate internal range liquidity. Here on ES, we don't have that indication, but price still comes and liquidates internal range liquidity before going back higher. So just one of the many reasons why divergences are so key.